Alright, folks. Well, hello. Welcome back to Lecture.9 of the MTJ Live Trades 2025 Mentorship. In this lecture, I took a trade on the German 40, as I promised. On my YouTube post, you can go there, and I told you guys that I will post this trade, which is a very huge trade for me and very profitable. But I took two trades. And unfortunately, the first one, that trade that you guys can see right now, was a losing trade. And the next trade is going to be a profitable trade for me. So, it's very important for you guys to understand that the euro pairs and the Europe markets, they're always kind of, they're pretty volatile during the London session, but during the New York session, doesn't matter, the AM or PM session, they're pretty quiet, and there's not that much of volatility in the market. And also very important to understand that, during the London session, usually there is always news, high impact news or medium impact news driver, but during the New York session for the Europe markets and during the Euro pairs, there's not that much of news during the New York session. So you guys can see I took this trade based on that daily low, the sell side liquidity, and also I took the trade because price was inside of the London close, not the London close, the London session macro, so 4:50 to 5:10 p.m. So I wrote it. That's not correct. What's in there inside the London close macro? It's unfortunately wrong, but it's the London macro, so it's between 4:50 to 5:10 a.m. And you guys can see I've placed my stop loss above the 1 minute order block. These two up close consecutive candles, which were also above the new week opening gap, the 50% of the new week opening gap. So I placed my stop loss there because I thought it would be a safe area and price wouldn't go to that level, but and I also thought that would be a trap for the retail traders, that false breaker, because as I said, we're inside the macro, and this was that was my mind process. That was what I was thinking at the moment. So at this point, I thought that the buy stops are taken and price will eventually start to trade lower. And very important to mention here, guys, this trade was on 31 of March, and it was on Monday. So and I took this trade on the German 40 because on the US 100 there were no news, so I couldn't trade the US 100. And I also posted a picture of the US 100 on Monday on my post on the YouTube channel. You guys can go and see it, that it was very choppy and price was consolidating all Monday because there was no news, so no trade for me. And this is why I took the trade on German 40, because there were news for the German 40. And you guys can see here is this up close candle on the 15-minute chart. So I consider that as a bearish order block. So I want to see price go to it and then eventually start trade lower. And here on the hourly chart, we can see the market structure. Price has been trading lower, and right there, the relative equal lows are taken, and the last sell side liquidity is what I'm aiming for. So this daily low right there from 24th of February. So for you guys, I am gonna blend the news calendar again here, First Factory. You guys can see here for the US 100, there are no news on Monday in the market, so that's why I didn't trade it. And right here, you can see the news calendar for the Euro market. So German 40 is a Europe market, so it's in Germany, and that's why there was also CPI all day long. So that it was the German CPI, and that's why I took a trade on German 40, because I knew price will deliver, smart money is behind it, and price is going to be very volatile. and because of the high impact news driver, I took the trade. So, and here I also write it down: if price really bearish, it should respect the up close candles. It's just a friendly reminder for you guys that, the algorithmic price delivery, if price is really bearish, it should respect the up close candles, and there shouldn't be that much of up close candles. And if price is really bullish, it should respect the down close candles, and there shouldn't be that much of down close candles. So that was just a friendly reminder for you guys. So at this point, I thought that buy stops are taken. You can see, guys, here, this is the midnight open, and you guys obviously know that, we use the midnight open for the London session. We can't use the 8:30 opening because, New York Open hasn't been yet. So in this case, I just used the midnight open. And you guys can see here these 3 up close candles, right, on the 5-minute chart. That price traded above the midnight open. So that's, for me as a smart money trader, enough as a manipulation. And I know that these trade above the midnight open is right now a manipulation and also a bearish order block. So that's enough for me. So now after price traded lower below it, I want to see price trade higher and, trade to those up close candles and then eventually use them as an order block to start trade lower. So at this point, I thought I might even get out of the trade as in stop loss. I might get stopped out of the trade, but I submitted the trades and I just wanted, the trades to pay out. So I thought that 5-minute order block would push price lower, but then I thought that price is respecting the busy buy side and balance side and efficiency, and smart money wants to push price higher for one more time. So one more, or let's say this way, one last push to the upside, so to take the buy side completely, that way the initial highs are taken out, so there is no sellers. The early sellers are right now punished, and then eventually they can start to push price lower, and also in this way they can accumulate their positions and start to build more positions in. So here we can see prices trading higher. So we have also relative equal highs on the 1-minute chart. The high on the left is higher than the high on the right. So 2 short-term highs, a relative equal high. And also we have this, a false breaker to the upside, but a fair value gap. So it's a false displacement because the narrative is bearish, and in this case, I knew that price is gonna go lower because of the higher time frame. And yeah, let's see what price is gonna do. So at this point, I'm just gonna speed up the video, but this is a live market, guys. There is no replay. There's no nothing, no tricks. This is a paper trading account and a live market, okay? There's no tricks here, no market replay, no nothing. So I'm just gonna speed up the video so this way it goes faster and we can save some times. So guys, this trade didn't really hurt my account or anything because I have a model. I only allow myself to maximum risk 1.5% of my account, in this case $1,500. And if it's a stop loss, it's completely fine with me. Then I knew that I entered the market early, so I'll wait for the next displacement and the next setup, and as soon as I have it, then I'll re-enter the market. And as you guys can see, I will show it to you in a few minutes. You will guys see that I re-entered the market with no fear, with no panic. I'm completely fine and I'm completely relaxed, and I'm following the model. And if it's a stop loss again, then it's if it's another loss for my account, I completely don't care about it because I have a model and I follow this model and I do what the model tells me. And if it's 2 consecutive losses for me, it's fine because I know if not tomorrow, if not next week, then if not next month. Eventually at some point I'm gonna make it back because my model is absolutely profitable and I trust the model. And yeah, this is the mindset that you guys should have. So again, here you can see that price trades to that, this down close candle and this price leg in this, the last price leg, this small trade to the upside. So price trades to it to the last up close candle, or to the first up close candle, down close candle, and then eventually it's gonna start to trade higher and take out the short-term high, or the swing high on the left. And this way we'll also trade to the CPI, to the sell side imbalance, buy side inefficiency on the left. So price is completely filled, as I said, and early buyers are taken out of the market. So also very important to mention here that we are inside of the macro. So this is another important factor for this trade to the upside, and aiming for the buy side liquidity and taking the early sellers out of the market. And again, guys, I really apologize that sometimes I have to just record the trades on my phone because I have a personal life and I can't be home all the time. So this way, I have to record the trades on my phone, so this way you guys can learn. So we saw just a minute ago that the first trade was a losing trade, and this is the second trade. So you guys can see after price traded higher, it took out the buy side liquidity, it took out the relative equal highs, and it gave me a displacement to the downside with a breaker. Also traded below the new week opening gap, and I re-entered the market immediately, and I risked again 1.5% of the account. So here on the 5-minute chart, you guys can see, and on the 15-minute chart, you guys can see why I re-entered the market. On the hourly chart also, you guys can see here again the aim for the trade. So these lows right here, this low, sell side liquidity, which is also a daily low. So that's the pool of liquidity for this trade. And yeah, here on the 1-minute chart again, you guys can see I have the displacement, with the second short-term high, the upper short-term low, that price traded below it with displacement. That's why I took the trade lower, because I have a valid displacement as a smart money trader. Well, first of all, buy side is swept, liquidity is swept, so buy side liquidity is taken, and now I have relative equal lows, so I will aim for those. And yeah, that was the target for the trade. So at this point, price is trading higher. Why? Because it's trading to an up close candle. It's gonna use it as an bearish order block. Right there, you guys can see this is the up close candle on the left. It's trading to it, using it as a bearish order block. Also to the buy side and sell side efficiency on the price leg to the upside. There's fair value gap, so it's also trading up to them and use them as a inversion fair value gap. And it's starting to trade lower and take out the relative equal lows. So it's aiming for the sell side liquidity because because of that false breakout to the upside, retail thinks right now that price is really bullish, and they will start to buy at this point because price has pretty much traded lower, so they want to catch the bottom. And that's why they think that price is going to go higher, also because of this false 1-minute breakout. So at this point, you guys can see that there is absolutely my model. For everyone who listens to my lectures and the episodes of the 2025 mentorship, you guys know that there is my model, because a sweep of liquidity has took place, and there is also displacement, and I have a narrative and a higher time frame bias and a higher time frame pool of liquidity. So at this point, price traded below in short-term low, a swing low again. It gave me another displacement, which is also a up close candle, so it's a order block. And I moved my stop loss to the high of the first, bearish order block. So at this point now I'm just risking 0.6% of the account. So here I should have actually took a partial at this point right there. I should have, take half of the position off, or at least a third of the position, but I don't know. At this point I was pretty sure about the trade, and I was a little bit greedy because I had a loss of 1.5% losing trade. So I thought I might just, in this trade I will take no partials. I will risk it, and I will aim for the measure sell side liquidity. At this point I was also pretty confident about the trade because it gave me a pretty strong displacement. So at the 15-minute time frame we can also see the lows here, and on the hourly chart we can see the sell side liquidity right there, also the daily low. So this is the pool of liquidity, also the target for this trade. And right there is the midnight open. Okay, that price traded above it for a very short period of time, and then created up close candles, and then eventually started to trade lower. So yeah, at this point as price traded higher, I don't want to see it to trade all the way up to the bearish order block and then eventually start lower. I'm not saying that it can't do that. It absolutely can, but I wouldn't like that. I just want to see it to trade to the last or to the previous fair value gaps, outside and bounce by side efficiency, and then start to trade lower. And here again, I marked out the measure sell side liquidity, the minor sell side liquidity, that it is absolutely taken now, so it can't turn against me at this point any time. But I'm willing to risk that because there is high impact news driver. It's the German CPI, and I'm willing to take that risk. So right here, if price trades lower and trades below these, up close 2 consecutive up close candles, which has price created just a minute ago, if price closed below them, then it would be another order block for the price delivery, and price will refer to them as an bearish order block and accumulate more position, and then eventually start to trade lower. Because here's the first trade that I took. That was the losing trade. The first trade was only with 40 lots, and this trade I took it with 60 lots because it was still 1.5 position risk for this trade. And I wrote it here again that I entered the market with no fear because I have a narrative and I understand the market structure. So here again, price closed on the 5-minute chart. Prices, it closed below the up close candles, the consecutive up close candles, which are now a bearish order block for the price delivery. And here on the 1-minute chart, same thing. This is the tap down analysis, very important to understand. So I could have just at this point placed my stop loss above the these up close candles, these 2 up close candles, but because today's CPI, I just thought I leave my stop loss above there because it's very volatile and might go against me. It might go higher and then eventually start to trade lower. So here again, price should respect these up close candles because we are bearish. And it seems like it wants to respect the up close candles. So at this point I've moved my stop loss I wanted to move my stop loss to above the consequent encouragement of this fair value gap, which is above the 50% level of this displacement. Because if price is strongly bearish, which I assume price is very bearish, then I don't want to see it to trade higher to the first created fair value gap above. So at this point I was pretty sure that price shouldn't go above these up close candles. I moved my stop loss because it created again 2 other up close candles, so another order block. It's like a ladder, and at this point I was pretty sure that price shouldn't go above there, and if it does, then it's not that bearish, and I'm not willing to be part of that trade anymore. So this is very great. You can see here that price is, it's displacing below the sell side, below the swing low. And this is what I like to see if price is really bearish. So here, this is the London high. Okay, the high for the London session. And price is right now aiming for the, also the London low is taken, so it's still aiming for the daily low as a pool of liquidity. So here on the 15-minute chart again, here is the midnight open again, okay? And we can see, you guys can see these 3 up-close candles. These 3 consecutive up-close candles which closed above it. Here is the new week opening gap for this week. And again, these 3 up-close candles above the price, they are a constitutional order block, so price should never ever trade above them again. And that was the daily low that I showed you guys. And yeah, that was the idea for this trade. And the reason that I took this trade actually was, on the 15-minute chart, I had the perfect setup. Price was, trading above the midnight open, right after the midnight open for a few hours. And it created 3 up close candles on the 15-minute chart and then closed below them with displacement eventually. So there for me, institutional, valid institutional bearish order blocks. And as price traded to them and then started to trade lower, I was pretty sure that it's gonna be, the price is gonna deliver. And here again, we are inside of the macro. Which macro? Well, I assume you guys know it's 5:50 to 6:10 a.m. So this is a very important macro for the Europe and the Euro pairs and markets, but not for the US 100, of course. And again, I moved the stop loss lower to the second order block or to the third bearish order block because price shouldn't go there. So at this point, this is a institutional order flow entry deal right there where price trades higher inside of this fair value gap with the sell side imbalance, buy side inefficiency. So at this point, I want to see price to very strongly trade lower and then take out the higher time frame sell side liquidity. So again, the main reason for this trade was, news calendar and the setup on the 15-minute chart. So at this point, the trade is taken, and I will post the setup on the 15-minute setup on this YouTube channel on my post. You guys can see it. So here's the first trade, 1,800 losing trade, and the second trade is the 5,000 winning trade. So I made it back. So again, for you guys, if you don't want to go to my posts on this YouTube channel, I'm gonna do a quick review here. So here's the buy side taken, okay, the London high is taken, and so the buy side liquidity was swept in my mind. So here's the midnight open on the 15-minute chart. You guys can see these up close candles, so price traded above it, and then eventually it started to trade lower with displacement, and as price started to trade higher, it traded to those up close candles which were bearish order blocks. So that was for me a valid institutional bearish order block, and this is why I started right there. You guys can see it. These are the up close candles, and this is the trade to them. So they're also traded above the midnight open right there, then displaced lower with breaker, fair value gap here above the 50% level of this price leg. Price traded higher to the orb filled the fair value gap, traded also to the bearish order block, the institutional bearish order block above the midnight open, and then started to trade higher. And on the daily chart, here there is a small volume imbalance on the daily chart, and also the sell side liquidity, so the relative equal lows, and also the new week opening gap. And the sell side liquidity is what I was aiming for here on the 5-minute chart for your notes, and eventually right here on the 1-minute chart. So thank you very much, guys, for watching this video. I don't know if you heard it out, but unfortunately I'm a little bit sick, so during this lecture I couldn't really talk loudly and clearly, so I hope you guys understand what I'm saying. And yeah, I hope you guys found this lecture insightful. And if you have any questions, feel free to write me a comment or an email, and I'll answer all of your questions as soon as I can. So yeah, again, I hope you guys found this lecture insightful, and be safe till talk to you next time.